All right, then, guys, Jeff here. So today's Monday. We came back from a weekend of 48 hours of no trading. And I said this before on multiple occasions. And of course, on Friday, I'm going to show you guys something that I actually posted on Friday. Okay. Just hear what I actually say over here. Evolve into a proper procedure towards World War. So, wasn't okay. Super duper positive over this sort of catalyst, especially on Fridays. Okay? Especially on Fridays. I've said this before. Fridays are usually the worst time for people to really jump into the market because a lot of time that's where there's way too much uncertainty. Okay, China can suddenly just be like, we're locking down the whole entire country. Russia can suddenly just say that they want to use chemical weapons. US can suddenly say that they want to actually start to involve themselves in the war. Ukraine can suddenly say that they want to give up. A lot of things can happen in the short 48 hours. These are things guys talk about. So yeah, over here, basically, just to give you guys a short, like a short video of myself actually talking about how, usually on Friday, things of this nature usually tend to happen. Okay, so this was posted on Friday, which is 8th of April, 3 days ago. I talked about how, the chances are there's going to be a lot of advancement in whatever is going to be transpiring throughout this whole entire thing, be it China, the whole situation around China, or be it the thing around the whole Russia-Ukraine situation as well. So over here, I'm going to be showing you guys what my main concern is in the market at the moment. Okay, so first of all, we have to look at this. China is accelerating its nuclear buildup over rising fears of US conflict. Okay, this is definitely going to be this huge concern that I do already have in my own mind to begin with. Okay, China has accelerated an expansion of its nuclear arsenal because of a change in its assessment of the threat posed by the US. People with knowledge of the Chinese leadership thinking says shedding new light on a build-up that is rising tension between the two countries. The Chinese nuclear effort long predates Russia's invasion of Ukraine, but the U.S. Awareness about getting directly involved in the war there has likely reinforced Beijing's decision to put greater emphasis on developing nuclear weapons as a deterrent. Some of these people say Chinese leaders sees a stronger nuclear arsenal as a way to deter the U.S. from getting directly involved in a potential conflict over Taiwan. So the concern here is not even about Russia Ukraine anymore. The concern here for China is actually more towards the fact that Taiwan could be a possible geopolitical tension down the line. Okay, which I think that is fair on China's behalf for them to actually start to be a little bit more forward thinking about what's going to be happening down the line. Be it them wanting to get more into nuclear weapon deterrent in a in a case where if US ever wants to come in to overstep their boundaries for Taiwan and such. So that's definitely one of my concern. And yeah, and because of this article, even though that this definitely wasn't one of the big reason why Chinese stocks went down, which I will also be talking more about later on. This is definitely one of the top concerns that I do have for Chinese stocks to begin with. All right, next up, let's actually bring for this part. Chinese stocks dropped more than 3% after data shows China's produce inflation is surging. It's actually more than 3%. But then afterwards, pre-market, everything was actually down. Like you saw Alibaba down like about 7%. I don't know. Alibaba was down about 5% or so. I think Alibaba right now is about down 2% or so. Let's see, Alibaba. Okay, yeah, they're down about 1% or so right now. Futu, a company that I kept on buying puts on, even on Friday, even the video that I even uploaded for you guys. On Friday, I said that I'm going to buy more puts. And I think that this week is the week where those puts are actually going to be showing some form of a result for me. And Futu actually went down 7% in the pre-market. Right now, they actually recovered slightly down by 3% only. But of course, I do see more volatility to come in today and tomorrow as well. Okay, so we have to talk about how Chinese stocks are going down because of the inflation. Okay, so Singapore stocks no, Chinese stocks led losses in the Asia Pacific market on Monday. Investors reacted to China's inflation data for March and monitored the COVID situation on the mainland. Okay, so let's see, where do we have the so the producer inflation for March was higher than expected. It surged to 8.3% as compared to the year with a year ago. The official data shows above expectation for a 7.9% increase in the Reuters poll. So of course, I think that this is going to be affecting not just China, it's going to be affecting US as well. I do think that this is starting to be showing kind of like a foreshadow to what we are going to be seeing tomorrow during the CPI data. Okay, because of course we do understand that on Friday for this the Friday of this week is going to be a Good Friday. So usually we get our CPI result on a Thursday, and they do not like to put the CPI result on the last day of the week. So right now they actually moved it over to Tuesday, which is on 12th, which is tomorrow. So yeah, I do think that is some level of a foreshadow for us, because let's be honest, if China is getting this high level of inflation coming in, but it's for March, okay? So, same thing for us. We're getting for March data for tomorrow. So there is a very, very good chance that inflation expectation is going to get destroyed because of the imminent war that we just went through, but still going through right now. And I think that, oil prices, food prices, and I think for commodities in general, all of them are going to be going up and up and up. So that's definitely going to be a huge concern on my end. But yeah, inflation worry is definitely there. So I do see there are some level of hedges going on in the market. Be it if you actually look at your S&P 500 and your Nasdaq QQQ, you can see that a lot of them are actually going down and down. But you do see some of buying dip happening in the market, even in the pre-market, simply because people do think that it's unprecedented for how much it's actually falling. But let's be honest here, we still have an inflation data for tomorrow, and that's going to be a huge concern for the entire market, be it your retail investor or your institutional investors. Okay, so so yeah, this aside, Chinese electric car company NIO hike prices and suspends production. Okay, this is huge. This is huge. Okay, first of all, if you're talking about the ES8, 6, and EC6, they are increasing it by 10,000 yuan, which is $1,572 effective from 10th of May, which is a month from now. Okay, a day earlier on Saturday, NIO said that it suspended production due to COVID-related restriction in the last several weeks that has halted production at suppliers' factories. So I think that, especially with what happened in 2021, okay, we kind of already emphasized on the importance of production in all automobile company, be it if you're doing EVs or you're just doing your normal ICE engine vehicles as well. Those are going to be very, very integral. Okay, when we talk about halting production, is going to be huge. Okay, if Tesla going to halt production, you're going to see a hit in Tesla's numbers. Okay, Ford does it, same thing. NIO Expect does it, same thing. And this is such a huge thing that to the point where NIO is actually down 9% in the pre-market even until now. Okay, right now it's 7:38 p.m. and it's still down 8.7%. Okay, which is quite crazy. Okay, and it's still going to be continuously falling because for NIO, I don't really see them getting back up so soon. I already sold off a lot of my NIO stocks to begin with, so I don't really care about this. But if NIO actually drops down to the $16 level, like $16 level, it might be a little bit juicy for me to really get into it again. But yeah, so over here you have to really take it with a grain of salt. NIO is getting hit on top of all the catalysts that we have with this. Okay, you have nuclear weapons in China, possibly developing nuclear weapons as a deterrent. Okay, secondly, we have high inflation from from the producer inflation data in China. Okay, after that, they have increased in pricing due to supply issues. And then afterwards, they got a halting of production due to lockdowns in the whole country. They have problems stacked after problems stacked after problems. And because of that, I do think that NIO is getting hit a lot. And even then, I do think that this current 8% loss in pre-market, it's not even that bad. Okay, it's not even that bad, because if we actually want to put a proper price target of what a big loss could be, we're actually looking at back to January and February losses, where a company can easily lose way more. And of course, we are actually getting back to those levels as well, because on my own stocks view, okay, Neo, I actually plotted the floor pricing for Neo at about $19. It's now below the floor pricing at about $18.20. Okay, Robinhood, I put a floor pricing at $11.20. Right now, it's at $11 as well. So of course, a lot of these stocks are actually even going lower before the below the floor pricing that I actually placed. I think about mid January or so, and that's where the concern is actually starting coming again, because all these so-called tech stocks that we actually were into back in 2021, well, 2020 to 2021, all these good tech stocks that we actually thought is going to be good in the long run, okay, for example, the long run, okay, they're down about like 50, 60, 70%, even 80% for some of the companies as well. So of course, that's gonna beg a big question, which is, are these growth stocks actually worth keeping? Are they actually worth you buying the dip, or should you just sell out and just maintain your position in something more safer? But then, of course, this kind of just comes back to how growth stocks in general should not really take out a lot of your portfolio. But personally, for myself, I am a more risk. Well, I'm not really risk adverse actually. If anything, I'm the other way around. So I do like to hold more growth companies, even though it's going to be hitting me in terms of my portfolio, because in the long run, I do see good usage for a lot of these companies that I'm in right now. But I don't want to be the one to actually tell you guys to just keep on buying the dip, because I do understand that in this sort of economy right now, it's kind of hard for you to keep on buying the dip. If anything, you do want to look at the economy and see what are some of the plays that you're able to do, be it buying some puts or selling some calls, which kind of brings my whole point over to Twitter, which is one of the biggest news actually, which is Elon Musk reversing decision to join Twitter's board. Okay, I actually uploaded a video on my YouTube channel talking about how Twitter is having a new board of director. And I said it in that video to sell call. Okay, to sell call. Of course, right now, we're not looking at Twitter dropping by a huge amount. Twitter is now down about 1.64%. Okay, but right now, Twitter right now is in the pre-market is about $45 or so. When I said to sell call, Twitter was about $54 or so. Okay, we're talking about $9 difference. It has already dropped $9, and I'm telling you guys to sell call on Twitter back then, because 27% increment was literally the best day that Twitter ever had since the IPO. Okay, and Elon Musk made that happen. And honestly speaking, I don't really see anything going even higher than that, especially in this current market. I said it before, in this current market, we're going to have a very gradual sideways trading market trending downwards. Okay, a lot of highs are not going to be sustained. A lot of lowers are going to find new bottoms, and that's the constant concern for a lot of investors. So of course, I said sell calls. Okay, make it slightly safer for yourself. Sell covered calls. Don't sell naked calls. Okay, sell covered calls. Okay, so even for a lot of my stocks, even a lot of my weekly trades, okay, for the past 2 weeks, you have heard me saying selling calls, selling calls, selling calls, because that's where I'm gonna get a lot of my premium. Okay, is to by me selling the calls, because market, you're not gonna get this such a good day every single day. And when you do have a good day, you want to at least try to get some profits. And the way I get profits, instead of me just selling all the stocks away, I'm just going to sell a little bit of call, get a little bit of premium back on my side, and then I'll see what I can do on the other side. Maybe buy some puts, maybe buy some calls for other things. When days are a little bit down and such. Of course, my thoughts on this whole Elon Musk reversing decision to join Twitter board. I do want to weigh in on this. But I think that I will not be weighing it on this video. I will be weighing it on a separate video on Wednesday, which is going to be my weekly video every Wednesday and Saturday, which I also uploaded for the whole recession video on Saturday as well. But yes, I will be talking more about that on Wednesday, about the whole Elon Musk and the whole Twitter bot situation. So I'll talk more about that on Wednesday. All right, so next up, let's talk a little bit more about the Russia-Ukraine situation. So desperate Ukraine tells U.S. Bureaucracy is no excuse for failing to provide critical weapons and ammunition. And yeah, there's a little bit more movement in the whole Russia-Ukraine invasion at the moment. Of course, in this article, they did say something that was quite strongly worded, which I thought that was quite well written actually. So it is the 44th day of the war that we were supposed to lose on the third day. Okay, that's actually quite strong because 44th day of the war that we're supposed to lose on the third day, which I said before. Okay, the war was supposed to be lost by the third day, and it is quite a surprise for Ukraine to actually withstand this whole entire thing. It started on the 24th of February, and right now, we're at 11th of April, and right now they still haven't really taken over much of Ukraine. Right now, they're still actually on the gates of Donbas, actually trying to take over the southeastern region of Ukraine, which is quite crazy. And of course, because of this, they're actually requiring US to actually help them out with more ammunition, more weaponry, be it your drones, your tank killing missiles and stuff. So yeah, of course, right now I think the whole Russia-Ukraine situation, Russia is really trying their best to at least take over southeastern region, which is Donbas area. And the moment Putin actually take over the Donbas area, there is a good possibility that Putin is just going to call victory on that and just be like, okay, well, we're done. We're just going to take over the southeastern region. Ukraine, you guys are not going to have an issue with that because you guys would want to minimize losses because in Kiev, in Mariupol, in Kharkiv, a lot of them are actually dying. Okay, civilians are getting massacred by the troops of Russia, and because of that, chances are Ukraine might just be like, okay, you know what, you guys can just go ahead, take over Donbas, just leave the rest of the citizen alone. And because of this might actually so-called end the war by giving away Donbas over to Russia. That could definitely be a scenario, which is why a lot of people actually kind of worried because the end of the war actually comes with Putin winning this war because he'll inevitably get the Donbas region, which is not exactly the best winning condition or the best victory thing that we actually do want from the global point of view and such. So yeah, of course, I think that's going to be a little bit more concerning for us. But of course, I think that ultimately that's going to be happening, be it we like it or not. And I think that's kind of where we are at the moment, which is why, Ukraine and Russia, Ukraine is trying their best to actually ask for help from a lot of countries. And I'm not sure if this is going to be ending just from this. I'm pretty sure that the US is trying to a certain extent for the amount of effort they are willing to put into this. They're also trying to send some of their logistics over to help with Ukraine. But over here, the 6-year-old boy who is visiting his mother's grave in his backyard does not want to hear about bureaucracy as an excuse for not delivering weapons to Ukraine. And I'm not gonna lie, this is when you actually start to see this whole war in a different light, where you kind of just see that, like, man, there's a lot that is actually happening in this war. We're lucky enough and we're fortunate enough to actually be in our home, comfortable, working, maybe just falling sick a little bit, but we're not dying over here. We are not going to be hearing news about our relative or our friends dying in some other city near us and such. So yeah, pretty heavy for this whole thing. But yeah, anyway, I think that's about it for today's news. But just to reiterate, pretty crazy how much can happen in 48 hours. I actually explained this before, and I really do think that I actually find investing more and more dangerous the more I'm actually in it. Even though chances are it's usually the other way around, which is you find it more safer the longer that you actually invested in it. But of course, right now we do have to also take into consideration that first of all, we're in a hyper-inflated economy, okay, where the 10-2 has already inverted, and chances are we might see some form of a recession coming soon. And of course, I think some senator actually call it the war session instead of the recession, which same thing. The next step is also an ongoing war in Russia and Ukraine. That's also affecting global supply chain, especially for the food shortages kind of things. So with so many of these geopolitical tensions, events happening at the same time, alongside with a hyperinflated economy, and this hyperinflated economy is not just affecting one country, where it's actually affecting the whole entire world. Investing is definitely going to be a different playing field as compared to what we actually had maybe 10 years ago, 20 years ago, and such. But anyway, that's all I have for today's video, and I hope to see you guys tomorrow. Thank you.